Well, when they don't give you enough time, you just go ahead and shoot another video, right? We've got here, we want to keep our videos under 5 minutes because we know traders need actionable information as fast as possible. You don't want it long and drawn out. You want it in a concise format. Unfortunately, we can't always do that. Sometimes we do need to extend the videos, so we'll break them up for you in 5 minute segments. Okay, so what we were talking about were the relationships between XOP and USO, oil related companies versus the actual commodity. GDX, gold mining companies versus the actual commodity, gold. And we saw that there was more relative strength in the actual commodities than the companies. What does that mean? That's a great question. Let's take a look at one of the, let's see here. Let's take a look at what happened in the past between the two. So we'll go to XOP versus USO, right? And we're right here on ETFTRADR looking at this. So we'll do a little color that we can see pretty good. And let's go back to a daily chart. This is where we'll really see the relationship, if any real relationship. Now, right now we're seeing USO stronger. Does that mean that it's going to lead? Great question. What happened in the past? It looks like they're so very well correlated, except back here in November where you had XOP much weaker than USO. USO eventually caught up. So at that point in time, XOP and the actual oil companies were leading. And they did again from the bottom. So if this micro trend, let's see if we can see anything on one more down on hourly. So you can see here that trend that has defined this week with the actual commodities being stronger than the companies related to those commodities. You can see that very well on an hourly chart. The question is can we use this information from any previous trends? And you can see, look how big that divergence really is. Hasn't been like that in recent trend memory. Look at that. Pretty big divergence there. Pretty big right now. We had it fairly large back in January. Back in January, the commodity was weaker. They eventually got back together. So, not was hoping to find a much more actionable thing. Let's look about GDX versus what? GLD. Wow, and you can see just how much weaker GDX is than GLD. Let's see if we can see anything on a daily chart here. You can see that in the blue line, which is gold itself, how much steadier that trend is. However, look at that chart. Even with all the volatility in GDX, it remains on a percentage gain basis stronger than GLD. It almost looks as if every time it comes down to its relative percentage equal, it bounces right back off. So if that pattern were to continue, what? GDX would be starting to catch up with GLD here and maybe bouncing higher. More importantly, let's take a look at FXI, which has been very weak over the last couple of months here. And I wonder if that's going to lead to weakness in spread, weakness in the rest of the world. In fact, did you know that FXI bottomed out in October of 2009? The U.S. markets, or October of 2008, the U.S. markets, it took until March of 2009. Some 5 months later, it led us out of the bottom. So what's it doing now? Take a look at the weekly, and we can compare that versus the SPY. And that's just not a very good chart for the SPY. You can see the relative outperformance there. But bottom line, this is starting to potentially roll over. MACD is going below 0. Do you see that? And percent R just touched below 20. Potentially bearish.